Do you use your car for work purposes? If you are, your employer may grant you some form of allowance. In this video, you will learn about the different types of car allowances that you can receive and how to reduce taxes on those allowances. Personal taxation of car allowance in Canada. Usually, the automobile and motor vehicle allowance is paid in three ways. Number one, flat rate allowance. A flat rate allowance is a fixed allowance and is not based on the number of kilometers driven. For example, your employer might give you a flat rate of $200 a month for car expenses. This is a taxable allowance and is also pensionable and insurable, meaning that CPP contributions and EI premiums will also be deducted from this allowance. You can also claim car expenses as an employment expense out of this allowance in your T1 personal tax return. If the employer certifies in Form T2200, Declaration of Conditions of Employment, that you met the conditions of employment and had to pay for the expenses under the employment contract. Please note that it is your responsibility to claim the expense and maintain records such as a logbook and supporting receipts. Number two, per kilometer allowance. If the per kilometer rate is reasonable, no income tax, CPP, or EI is required to be deducted. The allowance is considered reasonable if A, it is based on the number of business kilometers driven. B, the per kilometer rate is reasonable. As per the Canada Revenue Agency, the reasonable allowance rate for the 2016 year is 54 cents per kilometer for the first 5,000 kilometers and 48 cents per kilometer for the kilometers driven after that. C, no other reimbursement is received from the employer in relation to the same use of the vehicle. If all of these conditions are met, then the allowance is not taxable to you. You will, however, need to maintain a logbook showing the business kilometers driven, the date of the trip, location, and purpose. Number three, combination of flat rate and reasonable per kilometer allowance. This would be treated the same way as a flat rate allowance. It is considered as a taxable benefit and is added to your income. You may claim car expenses if the employer certifies that you are required to use your car to travel for work on Form T2200. Thanks for watching. Please remember to like, comment, and subscribe. You can also follow us on Twitter and Facebook for more great tips. See you next time.